Hello there, everyone. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am delighted to bring you this very informative presentation today. Listen, the key to success in the stock market is to not just generate profits, but to achieve exceptional returns that surpass typical market performance. That's the name of the game, right? Otherwise, just buy some mutual funds. And so that's what we're going to do today, is focus on just how to do that. Get those exceptional returns that are risk averse at the same time. And given the current market situation, the next best opportunity to get started might in fact be just right around the corner. So let's learn a little bit more about it, shall we? All right, so first things first, I always like to paint the picture before we even get into discussing how the sausage is made, right? So this is a look at the performance of this technique, the performance of this strategy, sort of the number one strategy for the S&P 500 that can be found in VectorVest. And it's quite stunning. You know, you can see that there are times where we do have, in fact, some pullbacks, but largely they're around those major economic events and the damage is quite minimal, you know, considering the COVID collapse, for example, which would be located in this area on the chart. A very rough year in terms of 2022, fairly docile, you know, compared to a lot of performance that you'll see out there with this equity curve. And of course, it's up a paltry 500% with S&P 500 caliber stocks since just the beginning of 2012. And so even with the COVID collapse, guys, and those kinds of really tough, turbulent times, your maximum drawdown's coming in just over 20%, which is reasonable even for, you know, systems that carry a ton of risk. So I love the metrics that we see here, including the winning trade percentage being above 50%. And, you know, considering the return, that is, again, a phenomenal number. So where is it, right? And when is the best time to start using it? And moreover, how to use it. So we're going to address all of those potential issues that I know that you're thinking about right now as we continue on here. So let's get to it. We get right into VectorVest. And as I get here, boy, yeah, we can see the market's really in a bit of a fall here over the past couple of sessions. And of course, what that's inevitably going to do, it's going to sound kind of funny, but I've learned to love these, hopefully in some cases, major pullbacks in the stock market, because all they do is create more opportunity after we stop going down and start going up again. So one of the things that you're going to love about this technique is it's going to be telling you to do literally nothing right now. And we're sort of waiting, or we'll be waiting for the next buying opportunity, which could come hopefully in the fairly near term anyway. So given that, let's go right to the most important place to start here in VectorVest. That's going to be the trading system viewer. So I'm going to go to viewers at the top, and then over on the left, we'll choose trading system viewer. And I'm going to draw your attention to one that we've just put in. It's called S&P 500 Winners 50/15 Standard. And what we've done here is we've incorporated a stop loss that's universal. No matter who you are or what your access rights are in VectorVest, this could be a solution for you. Okay. And so what we see then next is that it's prudent. You know, so you're kind of after the best of both worlds. You're after, you know, really good stocks that are risk averse. And when we look at the market timing signal being used, it's also, in this regard, very protective. And you'll see that when we get to that in just a bit. So it tries to get in fairly early, but not too early, and get out fairly early, but again, also trying to be as sure as possible that markets are in fact peaking. So as we continue across, the metrics have gotten a little worse over the last couple of sessions. We were green all the way across just even yesterday. But you can see over the last month, it's holding up there. If you're a long only strategy and you're only, you know, basically even for the last month, you're doing pretty well. The last 3 months is 5.4%. And of course, market hasn't really done much for the last 3 months in totality either. But for the year, we're up 25 in this model. And boy, look at this little spark chart. You can see some of the other spark charts that surround it Look at that equity curve. I mean, just like a ruler. It looks terrific. And you'll see that even this system, as we've already noted, does have some times when markets turn really sour where, it's going to pull back, but it's going to limit that damage. So it's not always going to look this pretty, right? But in times where the markets are performing well, or even maybe not performing so well, it tends to go up a lot more often than it goes down. So your all-time performance is listed here again, 503.5% as of this current time that I'm filming the video now. Your annualized rate of return, guys, is 39%. And look at the drawdown over the last year. That's the highest peak achieved in your portfolio to the lowest trough in terms of percentage. I mean, do you think that's something that you could live with? My goodness gracious. And best of yet, for I know at least some folks, no add-ons required. So that is great, right? We need to have plenty of solutions for everyone. And so what we're going to do here is take a deeper dive into this. Hopefully it's already struck you that it's probably a good idea to continue in this video. So let's keep going. I'm going to go up here to the top. We're going to go to the trading system details. So we can look at the details, we can paper trade it, get a feel for it, or we can even provide actions that will give us the daily game plan, if you will, so that we just actually trade it from the instructions that the trading system provides. So we're going to be covering all of that in this video. Okay. For example, you can just plug it into RoboTrader if you happen to have that plug-in module for VectorVest, and literally then you're just accepting the orders that the trading system tells you to do, which is pretty cool. All right, so let's start back at square one with the trading system details. I'm going to click on that button there, and when I do, it's going to bring me up a page here where we can start looking at the performance. Before we get there, though, here's your S&P 500 winners 50-15 standard. Trades the S&P 500 stocks that are buy rated and sorts to the top those with the highest price and lowest positive price momentum. Positions are held through down markets and managed on stops alone. This trading system was formerly known as Model Portfolio 2, but we've changed the stop from Profit Locker 50-15 to Gain Loss 50-15. It'll be interesting for me to just point out quickly, there are times where the Profit Locker stop is very beneficial over the long haul. But we were pleased to see that we could make this slight modification, and the performance has been quite similar in totality over the entirety of this test bed for the trading system. Okay. When we look at the metrics, over 1 month, obviously we're starting to lose a little steam here. So that's one indicator, hey, maybe I should just watch this thing, look for the next best potential opportunity to get started. But over the 3 months, 6 month, year to date, you can see on every other metric, nicely green. And the numbers are really quite stunning. Okay, so a 3-year, 38% gain loss with only a 17 draw. That's doing pretty well. All time, 494% at this point with that 21 draw, but still holding on to 52% winning trades. We can look at some of the trades that are in here currently. You can see what stocks they are, what their symbols are. We're always long here. What you're going to learn here in a bit is there's times where we think about replacing stocks that we sell, and there's times where we don't consider that at all. Is basically how this is run. You're never going short or buying contra ETFs, or anything like that. So you'll have some varying purchase dates here because of that methodology. We're going to start a campaign with a full tranche, but if we sell something, then we'd be looking to buy something back, and we're not going to sell it, unless it hits the gain or the loss target that we establish. That you have the quantity, the prices, the gain loss, and the percentage as a result. You can see there are still some really big winners in here, even after the last couple of days. You have your cost per share and so on as you continue to go across to the edge there. All right, so with all of that, you can also come up here to the trading system rules for those of you that really like to dig into how the sausage is made. Others don't care, So I'll let you guys be the judge. But here at the top in rules up, you can see that's the only condition in which we're going to buy long is when our timing model is in an up mode. If we are down or neutral, we're taking no action. And what that means is we're letting our stops, which is a 50 gain off the purchase price or a 15 loss, whichever happens first. Then we would close that position and replace it with the next best stock from the stock selection strategy, which is S&P 500 winner strategy. Okay, so S&P 500 caliber stocks and all that good stuff. We're trying to maintain 10 positions. We will automatically replace closed positions, but only in the up. So we'll be covering what that means here in a bit. You're going to invest at the average portfolio value. As stocks go up in price, portfolio rises in price. Anytime we sell something, we're going to buy a new stock in at that current average price of all the stocks that we own. So if you started with 10,000 per, at some point you're going to be investing 11,000 per, 12,000 per, 13,000 per as the portfolio continues to rise in value, just to keep everything as weighted evenly as possible in your risk profile. Okay. And I don't want to go too deep down the rabbit hole on how all this works. Just give you a feel for it. Okay. The maximum stocks per industry is going to be 3 to try to at least provide some diversification and also realize there's some really good stocks that just all happen to fall in the same kinds of industries sometimes. So you may not want to limit it too much, is what this says. But, some diversification, always nice to have. All right, and then never buy more than 2% of the average volume, which is smart from a efficiency of getting in and out of the trades. So this is a really well put together trading system in my view. It's got a lot of risk averse features to it, which I think is great, particularly when you get the kind of performance that we see. All right, so we'll come back up here. The next thing I could do, of course, is I could go ahead, just sticking with Trading System Viewer, realizing, hey, there's no need to do a back test here. The back test is already done. That's all the data and the metrics and everything that we just looked at. Sure, you can change some time frames around and see how it holds up if you start at a different point in time. And there's some validity to that, of course. So I'll let you guys make your own decisions there. But what I'm going to do is just convert this thing over, and you can do one of two things. You're either somebody right now that's in a position, well, okay, market seems like it's a little disjointed. I'm a little uncomfortable right now. Let me just follow this thing for a little bit until I build up some comfort level, and then I'll consider, trying to use it. Or you could already be like, hey, all right, I'm starting to make sense of everything that's being said here, and it's going to tell me the right things to do, at least based on the last over 10 years. Looks like around 12, right? A little over 12 years. So, I'll put my faith and trust in it going forward already. You're going to fall into either camp. So when I click on paper trade and portfolios, the first thing I could do is follow it, right? That's if you just, hey, I'm not convinced quite yet. I just want to see how this thing works, see how the order executions are going in real time for a couple of months. And then when I feel a little bit better about the market, feel a little bit better about the system, that kind of thing, pull the trigger. Then you could just follow it, okay? So if I follow it and open it, it'll give you all of that performance, all the history, everything that we were just looking at and the details from Trading System Viewer right here in the Portfolios tab of VectorVest. So again, you see the current positions, what the pricing is, seeing, having a pretty rough day today, but maybe not as bad as some, and all that good stuff. You see the beautiful equity curve, and all of that. So in real time, you'll see if anything drops out. If the market continues to suffer here for a little while, we might get down to 9 stocks, 8 stocks, 7 stocks, no stocks, and just kind of watch it, see how these stocks do in their earnings, all that kind of stuff. All right, so the other thing I would say is at the top, you have reports, and you can do things like look at the summary report. That's going to give you an overall feel of things, 52% winners, gain loss year to date, all that kind of important stuff. The other report, which I think could be more informative, would be the trade history. So if we click on trade history, we can get a feel for gains and losses in certain stocks. I see a lot of familiar names that this strategy has been picking up on, over the course of time. I see a lot of different purchase dates. I see a lot of great performance. I see a lot of stocks that eclipsed even that 50% target. That would mean that it kind of gapped up, beyond what the target even was that was established, which was 50. So I see a lot at 50 or more, don't we? And then, not all that many that didn't get there. Then we have our losers are a lot smaller than our winners. And there, in some cases, some of these stocks and biotechs have the ability certainly to do that. May have had a really bad earnings, gap down through that 15% loss. There's no chance to catch it till it even got to about 30. Has that ever happened to anybody? I mean, it's happened to me. I've been doing this for more than 20 years, and those things happen. And a lot of times they're unforeseen, right? But what this does, it cuts that loose, then tries to get you in a position with the next trade to get to these 50s. So that's stunning when we look at the performance. All right, let me get out of here and back into VectorVest. So the next thing we could do is and I like this option, if this is something that you want to consider to be at least part of what you want to do on a go-forward basis, like I think ignoring the NASDAQ, although there's some NASDAQ entries certainly in the S&P, there's some overlap there, right? So I'm fairly comfortable with that, actually. I think this could be something that's all that you do, right? Or it could be at least a good part of what you do, with sort of that in mind, the future, right? So as we look at the other way that we can go, we can start with an empty portfolio. It'll name it for you. You can rename it if you like. I am convinced, Steve. So I'm going to get started. Then you can match up your initial investment, whatever that's going to be. I don't know. I'll just put in a random number, right? I don't even pay commission, Steve. So I don't have to worry about, interest and margin, all this kind of stuff. Well, just accept that, right? Oh, I've already got that one. So I am convinced too. All right. You also. All right, let's go open it and see what it's telling us to do right now. So up here in the top right, this is your genius. This is your action plan. And I'll show you how here in a second you can even set up alerts to get your action plan distributed to an email address, which could even be, say, your portable cellular device, or even internet-based device, a portable device of any kind that can get some connectivity, right? So you can either look at it here in VectorVest 7. Right now it's saying automation is on there. Automation is up to date. And, you have a yellow circle that's spinning telling you, yeah, it's still looking for a changing condition, but there's no change right now, yellow. As you might imagine, yellow means, do nothing, let your stops dictate the result. So we're in a holding pattern, and as you might guess, we'll be waiting for a green. So let's talk about that briefly. I'm going to go over to the market timing graph. And when is the indication to buy next, Steve, right? When is that going to turn green? All right, let's talk about the reds and the greens. The greens basically in this case and everything else. So I'm going to come down here to the bottom and I'm going to go to the RT Kicker combo. That is the timing model that is used by this trading system, as we showed very early on. When I come over here to the right, what I want to do is go to the GLB RT Kicker to more cleanly explain all this to you, because basically what we're going to be looking for here, we're going to be looking to start that portfolio that was empty. The next time we have our first green triangle, then we just let the 50-15 stop losses do their job. And we only buy another replacement stock if you're on that green triangle segment in the future, okay? If it's yellow or red, you do nothing. You just let your stops help guide you to sell out either the top or low performers, right? But you don't replace. By doing that, you're taking risk off the table in case you get a more serious downturn. You're continuing to take more and more risk off the table over time, okay? That way, your portfolio can never completely unravel on you, and it can take 5, 6, 10 years for you to try to pull back out of a hole if you're not careful. Anybody that's been investing for the amount of time I have, or I know many of you maybe even longer, right? You certainly understand the effects of a bear market should we get ourselves back into one at some stage, which is inevitable, as a matter of fact. So, and I'm not saying, imminently or anything, but, bear markets happen and they happen often, and it's been a long time since we've really had one, at least by VectorVest definition, where earnings are the main contributing factor. So, having said all this, I hope you get a pretty good feel for it. You're basically going to be starting really loading up and buying stocks low after markets have come down quite a bit is the optimal time to start. I mean, this is the very best. After a series of reds and yellows, is going to always be the very best. It's like a rubber band, okay? At some point, the economic tide begins to turn and people start really seeing the value in buying some cheap stocks at that point. Markets take off like a bird. We start limiting risk when things get a little indecisive. All of our good buying action was down here. This is where the money is. Buying stocks here, there's limited upside, at least for quite a while. You want to buy low and you want to sell and manage high. Okay? That's the name of the game. So, as we get into next week, I think you get a green up triangle when you have a green light in the price column of the color guard and the moving averages down here are bullish. So the 10 is over the 15. If we look at the right-hand edge, we have the 10 below the 15. What we don't have right now is a red light in the price column, of the color guard. We have a red light everywhere else. Now that red light, it can't be red today because it's working off a green a week ago. But look at Monday. Monday, on continued downward pressure here, Monday would turn red, okay? And then what you would have back on that chart is a red triangle, okay? So you could have a red triangle as early as Monday. And then if we were, it's going to seem strange to you again, this is what I've learned to love about VectorVest, me personally though. If we can get a whole series of those things like we did back over here, the even better opportunity to buy the first green triangle up. Because if you only get one or two, sometimes you're just kind of going back and forth here. See what I mean? So the more you can stack up here, that means the more emphatically the market has dropped, okay? And so when believe it or not, you want to see that for your next launching point as being the most optimal. Now, you can launch this thing at any time, but sort of get really excited after the next series. And it'll come, and it may not come for a while, and that would be great too. I mean, I don't want you to lose confidence in, hey, look, maybe we only get one or two red lights here. Steve said, wait for a series. No. You do what it tells you to do, okay? Like all through history of this for 5 years, I mean, just do some study, right? Like you're going to have trouble making a lot of sense of waiting too long when you look at that, right? But the cool thing is all the green ones for the most part are low, or when the markets are low. That's the observation to make, okay? So just keep buying those green triangles. Best time to start is on the first one after a red. I mean, and the more reds you have, the better the start, typically. That's the way that goes, okay? All right, let me get out of here. And hopefully that all makes sense. And what a terrific trading system to think about using. If you want to backtest it, you can. You can go into backtest an idea and select that trading system. So we can select S&P Winter Standard, right? And then I can manipulate these dates, sort of to any time frame you wish to get started. So just take the date calendar back, and we can just go back to, let's say, like last year. So we started November of 23. And see, it's doing all the buys and sells over here. Largely, there's not a lot of activity. If we look at the current holdings, Transdigm is up 26, ServiceNow is up 25, Granger is up 18, and you can drag this up and you can look at all the performances. We have 9 winners, 1 loser. Eli Lilly is the loser? Oh my gosh, how did that happen? That's real bad luck there. All right, anyway, look at all the other ones, man. Tremendous. It's not just 1 or 2 stocks, okay? There's 6 stocks here that had noteworthy gains. So that's the system, guys. It doesn't need to be any more complicated than that. You go to Viewers, Trading System Viewer, find your S&P 500 winners 50-15 standard, right? And then you can paper trade and follow it, or paper trade and start it. And when it's time to do something, it'll tell you what to do. Incidentally, if you want the alerts to the portable device, you go up to the Tools menu in the top right. You'll then go to Application Settings, and then into Alerts. And this is obviously fictitious, but you can edit or add an email. And so we can do 11111 at tx.com. It's going to have to be an actual legitimate email, obviously, to get the actual orders. But then the most important one is the first one: send portfolio and order alerts. All the rest of them I consider optional. Okay. And then, later on, if you want to adjust, maybe you accepted some alerts that you don't want to accept any longer, or you didn't accept an alert that now you think you should have, like RoboTrader, you can just come in here, make that, apply it, and you'll get those alerts. All right, guys, so that's going to be it for today. We'll see you back at VectorVest Community, VectorVest University next week. Good luck out there.